Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday. It's been a long week. It feels longer because there was no holiday. Last week we had a holiday. Actually, last 2 or 3 weeks we've had a holiday. But this one was full 5 trading sessions. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, morning.
Morning.
Hi, good morning. And despite all the geopolitical uncertainty, I think markets just chugged along pretty nicely. So far in the last 4 days, the Nifty is up 1.5%, while the Midcap index is up 3.7% at record levels. And I think that in itself is testament to the strength of the markets and the way it's rebounded.
Well, that's right. And Prashant, we've got to pull through 2 more weeks before we get a holiday. So get used to the 5-day weeks for 2 more weeks. And then towards the end of May, there's a bit of a booster shot. We've got a Thursday holiday, so make sure you're in on Friday.
Thursday, the 2 weeks from now, there's a Thursday. Both of you are up to date, huh?
20th.
Both.
But it's the end of the earnings season, so you have to be in because so many results will be coming in.
And metals and new sectors. Right? So, absolutely. Well, let's just take it from the top, right? And I think that's where we are at. How many times have markets traded at the end of this war? Up and down, down and up. And this seems like one more. So just taking from the top, oil prices at $102 odd. The latest news is that US and Iran exchanged fire in the Persian Gulf. So that's what came through over the last couple of hours. So it's not just like, one-off incident. It's a bunch of things. And this is President Trump a couple of hours away. And this is what he put out on Truth Social, his platform, essentially saying that, 3 American destroyers just transited through the Strait of Hormuz, and the fact that they were fired upon, nothing happened to them, but they fired back and they sunk Iranian boats. The Navy is already sort of completely done and dusted with, and there's of course a fair bit of bombastic language in there, and that's what we woke up to. So oil, I think, from where it was before the post, etc., has moved up a little bit. It's not up too much, but it's moved up a little bit. Now, U.S. equities, all of this was information as U.S. markets were trading. So S&P was down about 1/3%. NASDAQ was down 0.13. The 10-year Treasury yield increased 4 basis points to about 4.39. Saudi Arabia and Kuwait lifted restrictions. Remember, they both put restrictions on U.S. military's use of their bases and airspace. They've, of course, gotten hit by Iran. And it was being speculated that, President Trump was kind of sort of holding back and not being more offensive because he doesn't have access to these bases, which is important to provide air cover for any operation. But the access is back, so we'll see what happens. Now, Iranian state media is saying that Iran attacked U.S. warships in retaliation for a U.S. attack on an Iranian oil tanker. This happened 24 hours back. So Iran essentially saying, well, this is retaliation. U.S. Central Command saying U.S. targeted Iranian missile and drone launch sites. So U.S. attacks the Iranian warship, Iran strikes back, and U.S. strikes back and takes out drone and missile launch facilities on the coastline. So it's classic escalation. Let's see if this goes anywhere. If you believe President Trump and what he told ABC News, he said, well, this is not escalation. He said it's a love tap. The ceasefire is going. It's in effect. So there is no, he's still saying he's hopeful the deal gets done and that Iran needs the deal much more than we do, etc., etc. So maybe just a flare-up, which is just that, a flare-up, and doesn't become like a full-scale cycle of retaliation. But we have seen some amount of escalation compared to where we were 24 hours back. Now, in another setback to the Trump administration, a U.S. Federal Trade Court has ruled President Trump's 10% global tariffs unlawful. Remember, this is a 10% imposed under Section 122 when the IEEPA tariffs were essentially taken away, or deemed unlawful by the U.S. Supreme Court. Now, of course, this again will go into a legal quagmire, and there'll be sort of challenges made. In terms of here in, locally speaking, it's been very, very strong. The momentum has been super strong. But there are 2 events. One, of course, is what happens in Tamil Nadu. So political heat is picking up in Tamil Nadu. I mean, is it really possible that the DMK and AIADMK will come together? Reports are suggesting that M.K. Stalin, the former chief minister or the leader of the DMK, now perhaps the right designation, has been authorized to take any decision with regards to, what the DMK wants to do, whether he wants to tie up with the AIADMK, etc., etc. But it's going to be interesting. And of course, the second one is the Tata Trust's board meeting, which is happening in Mumbai today. So that is the other one which we'll be watching out for. There's a fair bit there in terms of the fight between the two camps. It's out in the public, and perhaps you've crossed a line from where you can't kind of go back and all live happily together. So we'll see in terms of what happens. The levels remain the same, the Nifty and the Nifty Bank, both the Nifty 24,300, 24,685 on the upside, and about 23,800 is the level on the downside. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll pick it up from there. 100 points lower. We've had a good last few trading sessions, but actually, forget about the Nifty. It's been broader markets. I counted NSE 750 stock index, the Nifty total market index. There are 20 plus names which are up over 50% in 4 months flat, basically in YTD, year to date, from 31st of December to day before yesterday's close, actually. Well, Nigel has walked across to the wall with a quick check on the futures and options segment. Nigel, take it away.
Well, as you said, Prashant, there's been a bit of a spike on crude oil prices post the skirmish between the United States and Iran. But Mr. Trump says ceasefire is intact, so you can choose the piece that you like and see whether or not there is escalation or de-escalation. That's on your personal reading. We'll leave that piece aside for now. But the GIFT Nifty is suggesting a bit of a downtake, maybe 100, 150 point downtake. And past evidence suggests that if you buy the dip, you've made some money. So I think today as well, the bulls will fancy their chances once the markets go a little bit lower in today's trading session. Maybe 150 or 200 point downtake. They may look to jump in there. In terms of flows yesterday, the FI selling and the DI buying, well, it was much lower than the average that we have seen. But the FI selling was much lower, and I like that. There was some strength that we saw on the Indian rupee as well, and that, also reflected in the FI sell number actually coming down. Remember, today's institutional number will be skewed because there's a large trade coming in from Lenskart. We'll tell you about that in just a bit. But remember, by the end of today, don't get very surprised if you see a big deviation in the flows numbers. The May premium on the Nifty, that came down by around 50 points. It's come down to around 56 points from around 116 points or thereabouts. And there were some mild shorts actually getting added into the system. From the FI table itself, the number of shorts added were more than the number of longs. The short positioning continues added on that 86%. In fact, the short positioning yesterday went up by close to 2,800 contracts, which is in the ratio of around 2:1. Not just on the index, but even on stock futures. We saw some unwinding of long positions. Remember, the FIs as well are net long on stock futures. So yesterday, there was some unwinding on stock futures, but there was some addition on the short side as well. Remember, there is a bit of an arbitrage play that takes place, so you can't look at this in isolation. But that's the data points that's coming in there. The FI positioning actually is defensive because they wrote more calls than puts. Even in yesterday's trading session, more than 50,000 contracts were written on the call side. That's telling you that at higher levels, they believe that they can defend the higher levels. And that's why the 24,400 call aggressive writing is what we saw yesterday. Close to 25 lakh shares getting added, premium around 150 rupees or thereabouts. But what's giving hope is there is some put writing as well that's taking place. And we did see some writing at around the 24,350 put. Moving to the levels then, just punching in these options data as well as the technical levels that you're looking at. The crucial zone is 24,000 to 24,150. I say that because the 20 and the 50 DA may come in out there. But the recent high, that's yesterday that we saw, close on 24,500. The bulls, they were met with the resistance out there. And the bears, they came to fight back. So I think the first level of resistance will be this 24,500 odd mark. But we keep talking about the Nifty, the levels out there, and the range that we're trading in. The real action has been in the broader markets. From the lows that we saw at the end of last fiscal, the Nifty is up 10%. So boy, oh boy, that's good. But take a look at the traction on the mid-cap index and the small-cap index. They're up between 18 to around 23%, telling you the real action is in the broader markets. And a lot of market participants actually are picking stocks they choose. Remember, we saw a very, very sharp correction in the broader markets, and a lot of those stocks are not up just 18 to 23%. Some of them are up between 40, 50, 60, 70, 80%, and all of that in a matter of 45 days. So the broader market action continues. The GIFT Nifty suggests a downtake. I think that dip gets bought into at some time today.
Thank you very much for that. The mid-cap stocks and small caps have taken the elevator on the way up. But just a quick check on Asia before we proceed. Broadly lower. So across the board, you are seeing a cut of 1%, reflective of the growing hostilities, the fact that US and Iran have exchanged fire. You can see a sell-off, 1.2% lower on Taiwan, Hang Seng opening with a cut of more than 1%. And you can see that across the rest, the Japanese markets and the Korean markets too, in the red. And the GIFT Nifty is down close to about more than 100 points right now. But back to getting you the important updates from West Asia. The US president, speaking to reporters, said near the White House the talks with Iran were going really well and that the ceasefire was still in effect. He also added that the Iranians had agreed to not have nuclear weapons. Listen in.
They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast. Somebody said, what's your plan? I said, the plan is very simple. Iran cannot have a nuclear weapon. It cannot have a nuclear bomb. And it's not going to have. And they're really at the end of the line. Really are at the end of the line. Now, unless you guys feel differently. Now, these guys, I think, will say that Iran cannot have a nuclear weapon. Would you say? We wouldn't feel very good if they did, because this is what you're doing and all the work that you do and that we do. It wouldn't look too very good after a while with these characters. We're not going to give them the right to have a nuclear weapon. There's zero chance. And they know that, and they've agreed to that. Let's see if they are willing to sign it.
Ed Clissold, Chief U.S. Strategist, Ned Davis Research, is now joining air. Thank you very much for joining in, Ed. Rima here. Would you read too much into the exchange of fire that took place over the Strait yesterday? Donald Trump says the ceasefire is still in effect. He called it a love tap. But should we be worried? Should we read this as a sign of escalation or just a very small skirmish, one-off here and there? And secondly, markets have been so hopeful of, a diplomatic breakthrough. But the reality is that nearly 2.5 months later, it's not come through. Where do we go from here?
Well, the president has made it very clear that he wants a deal, and he has been tolerant of a few skirmishes in the hopes of it leading to a broader deal. And the markets are certainly looking past all of the daily activities now with the expectation that a deal will be signed, because the alternative is so tragic for the global economy that both sides would eventually figure it out. Last year was a taco trade. Trump always chickens out with regards to tariffs. This is obviously a lot more complicated, but the market seems to be trying to replay that playbook, that Trump will figure it out one way or another. So I'd say, well, that's probably the more likely scenario right now, that there's a risk that the market is too one-sided in hopes that Trump will find a deal, find his way to a deal. And so if he doesn't, there's obviously pretty significant downside risk.
Mm-hmm. So then, Ed, it's almost as if at some level it doesn't matter till it starts to matter once again, right? Ed, and what will that point be in yours? Is there a point? Is there such a point, or, markets have done phenomenally well?
So yeah, markets have done well. Yeah, on the hope that there will be a deal, and also we have to keep in mind too. Fundamentally, things have been very strong. Look at the Q1 earnings season. The beat rate or percentage of companies that exceeded expectations for the S&P 500 is right now running around 85%, which would be the third highest on record. The only two higher were right after the pandemic. So this has really been a very strong earnings season, but. I think there's two things we want to look at. One would be signs that the global economy is screeching to a halt. It's been very resilient in the face of reduced energy supplies. And the other thing on the U.S. side is that the U.S. consumer, particularly say the lower 80% of households, are kind of tapped out on savings. If there's started to be a sign that they're buckling under the strain of higher gas prices, you could see Trump move a little more quickly. Now, what we had in the United States was the higher tax refunds this year that were filed by April 15th by law because of the tax bill, the one big beautiful bill passed last year. People got more money back on average, so they're spending that money at the gas station right now. So it's not hitting consumer spending, but as time goes on, they're gonna bleed that down, and then you could see the political pressure in the United States really ramp up, and that's when I think you would see a deal one way or the other.
All right. Hi, Ed. Good morning. Good to see you in. This is Nigel on this side. Ed, a few months ago, we chatted about how the markets welcome a new Fed chair. And we've got one now. His history suggests that equity markets going for a bit of a tizzy just in the near term, 6 to 8 months. I think the average correction has been 10 to around 15% or thereabouts, post the new chair taking shape. What are the odds that takes place again? Or would you say that it's rather low? And also, what do you expect in terms of Fed rate action? Mr. Trump wanted his man there. Apparently, it appears he has that. But do you think they have any kind of headroom to actually even go ahead with one cut?
Yeah, so the study shows that on average, during the first 6 months, there's a 15% correction in the market. And sometimes, it's less than that. It's when there isn't really a crisis. And so the takeaway from the study is that if there is a crisis, it's probably going to be pretty severe because the market doesn't know how the new Fed chair is going to react. And that was a great example in 2018 with Powell in December, and because they didn't know how he was going to handle a slowing economy. So that's the takeaway from the study. Now, Warsh does seem to want to get to a rate cut. But even Treasury Secretary Bessent has alluded to the fact that it'd be difficult to cut rates over the near term. We think toward the end of the year, assuming this crisis in the Middle East is over, oil prices come back down. We think the U.S. economy is going to moderate. There could be room for a rate cut. But I think the crisis has maybe bought Warsh a little bit of time before having to move to a rate cut before the president would put a lot of pressure on him. But over the next year, if there's not rate cuts, I think you can hear the rhetoric from the White House ratchet up pretty quickly on Warsh.
Ed, we'll leave the conversation here. Thank you very much for joining in. Let's tell our viewers then the interactions that we've lined up on the show today. So coming up, 8:35, the management of Arvind will join in to discuss their Nalco GFT acquisition. 9 a.m., the management of Arvind Fashions will detail the Q4 numbers. 9:20, Neeraj Seth of 3R Investment Management will be our market master for the day. Following that, a discussion around Tata Trust meeting, which is set to take place later today. And then we'll be joined by the management of Escorts Kubota to talk about the FY27 outlook. Towards the end of the show, Lata speaks to two economists on how Bengal's economy may be boosted.
Time to slip into a short break, but we've got a lot of stock-specific action track for you this Friday morning. We get to that in just a bit in further detail, but I'll highlight the list. Lupin, Pidilite, Biocon, Dabur, Thermax. All of them will be reacting to positive news flows. We'll keep an eye on them. Add to the list, BSE. That as well appeared like a good set of numbers. On the flip side, you have Britannia, Mahanagar Gas, as well as Lenskart that will be reacting to negative news flow. And crude sensitives, well, they'll be doing a thing of their own. We'll tell you about that as well. Take that break, come back, get into further detail on all of these names.
Welcome back. It's time now to talk about stocks. This is CNBC-TV18 list of top stocks for the day to prep you up for this Friday morning. Lots of numbers, news to react to. Our team is standing by. Good morning, guys. Ekta, let me begin with you. What's the latest on Lupin?
Well, yes, Lupin came out with what was a good set of numbers. The revenue was up 32% on a year-on-year basis. The EBITDA margins expanded to 33%, so the street was expecting around 27%. And the profit came in better than expectations as well. India was up 11.5% this quarter. US highest quarterly sales ever. So the momentum continued from last quarter. $371 million is what they reported. The other developed markets did well, up around 7%, but the emerging markets were up 49%. API was up around 7.6%. So overall, it was a top-down beat. They had drugs such as Spiriva generic in the US, which did much better than expectations.
Right, and stocks been doing well. Pharma, the pack's done very well. Ekta, thanks for that for now. Thermax is the next one we're going to talk about. Vinny's got details here. Vinny, morning.
Hi, good morning. So Thermax, Q4 FY26 strong beat coming in on all the fronts. So we are seeing the revenue that's seen a growth of 12%. Margins, that's seen an improvement, 10.9% versus 9.8% last year. Order inflow, that's seen a very strong improvement as well, 4,490 crores. Do not forget there's a 1,600 crore order that has come in especially for the boiler package as well. So that is what is included in Q4, but strong order book also what they hold. That means there's more revenue visibility. 13,600 crores is the order book as on 31st of March 2026 versus last year was around 10,600 crores. So good jump up in order books, and overall the growth at this time is in the order book is mainly led by the industrial products and industrial infra segment as well. Industrial infra segment, which was a bit muted through the year, has started seeing an improvement in the last couple of quarters, and that's a positive sign. The street will take it well as well, and strong performance that one is seeing in heating, cooling, water waste solution segments of the company. That comes in mostly industrial products. So good performance all in all. We'll expect green on the screen for this one.
Okay, green for Lupin, green for Thermax. What about Britannia? Mangalam, crunch, no crunch?
No crunch. It's a limp biscuit this time around. Why do I say that? Because it was supposed to be weak in the first quarter because of all the problems that are taking place in the West Asia region. But the problem started in the last month of the previous quarter itself, which is why the revenue, the street was working with a number slightly shy of 4,900 crores. The company reported numbers a little above 4,700 crores. EBITDA at 853 crores. The street was working with a number of 950 crores. And as a result of which the net profit also is below street expectations. But, the net profit looks comparable to our poll largely because of lower effective tax, which is coming at 13% versus 25.5%. And it's been a weak show. The business, the company said, grew 9% in the first 2 months and moderated in March. The street was expecting at least a double-digit growth to come by in the first couple of months. They said supply disruptions due to West Asia impacted business. I sense that will continue into the first quarter as well, which is why I expect the stock to see some red.
Mangalam, I didn't figure you for a metals music fan. You are.
I am. Huh? Metallica for life.
No, Limp Bizkit. I think it was bad.
Had to say that.
Good one. Well, Biocon is the next one we want to focus on. And back to Ekta for that. Ekta, take it away.
Well, yes, an in-line set of numbers, at least on the revenue front, but the margins were better than expectations. So the revenue came in at around 4,516 odd crores. Street was anticipating 4,522 odd crores. Margins came in at 22.6%. Street was working with 20.5%, so that was better than estimates. And the profit was better than estimates at close to 200 odd crores. Biosimilars Q4 up 12%, driven by the advanced markets. Generics was lower due to Revlimid generic sales, and because of liraglutide sales in the UK, they actually did better. Dr. Thomas Roberts, who is the husband of Claire Mazumdar, has now been appointed as the non-executive director. So that would be an important point to note.
Thank you very much for that. Back to Mangalam for Pidilite.
Pidilite is a solid set. It's one of the best performances that we've seen in the consumer space so far. Revenue growth of 14%, EBITDA growth of 32%, and net profit growth of 37%. The stock went into the numbers, ahead of numbers at the high point of trade. Revenue as compared to the poll has been a big beat as well. We were working with a number slightly shy of 3,500 crores. The company's reported numbers slightly shy of 3,600 crores. EBITDA 833 crores versus a poll of 763 crores. Margins at 23.2% and net profit above expectations as well. What is this being led by? The consumer business. Volumes up 15.5% as compared to anywhere between 9 to 12%. B2B volumes up 15% despite external challenges. And as we speak right now, the company expects demand momentum to continue even as they manage potential impact on input costs in the year ahead. So there might be a slight moderation in margins going ahead, but the fact that the management is sanguine on demand should keep the stock afloat today.
Okay, so these numbers stick. What about Dabur, Mangalam?
Dabur also slightly ahead of expectations, and in fact the core is a lot better than what the street expected. So going with green on Dabur too. Domestic volume growth at 6% versus expected 4 to 5%. Revenue at 3,038 crores. The street was working with a similar number. EBITDA 462 crores. Our poll was 461 crores. So absolutely in line. And similar is the case with the bottom line as well. But the thing that stood out for me this time around is the home and personal care business that grew 17%, which is a very strong show. And the weakness in the overall numbers was largely because of healthcare and glucose, which was impacted by unseasonal rain. So all these factors put together, the core business doing extremely well. The management commentary in the con call was very good. Going with green on Dabur.
All right. Mangalam, thanks very much for that. Well, BSE reported numbers and a strong set. Devyani is here with details. Devyani, morning.
Well, a strong set of results coming in from BSE. There was heightened derivatives activity that was seen this quarter, and average daily premium turnovers in options are up 49% since last quarter to roughly around 28,920 crores. As a result, transaction charges were up 38% on a quarter-on-quarter perspective, and revenue has surged 26% in spite of a drop in listing and other activities of the company. Adjusted EBITDA, that is EBITDA adjusted for the labor code impact that was seen in last quarter, is up 34% since last quarter, and margins have expanded to 68% this time. Net profit is up to almost 800 crores this quarter, as against 600 crores that was seen in quarter 3 of FY26. All in all, a strong set of results coming in from the company, going with a green on BSE in trade today.
Okay, all right. Thanks very much, Devani, for that. MGL is the next one in focus, and Sonal is here with details. Sonal, take it away.
Good morning, Prashant. Well, it was a mixed set. Surprisingly, the volume growth was really strong, but as expected, because of high gas costs, margins were lower this time around. Revenues absolutely flat. We did have EBITDA, which was down 26% at 260 crore rupees. Margins were down 500 basis points to come in at 12.7%, and net profit accordingly was down 35% in the quarter gone by. As I said, volume surprisingly strong, up 11% on a YOY basis, up 1% sequentially, but that is something which was expected. However, EBITDA per unit was down 26% on a YOY basis, down 27% on a sequential basis. And we have the conference call at 4 p.m. today, so we'll understand what the outlook is going forward, considering the West Asia crisis, which has hit the gas economy the most.
Got it. All right. Thanks a lot for that, Sonal. Well, Vivek's picked up some scoop on Lenskart, and we're expecting a large trade today. Vivek, good morning. Tell us more.
Well, good morning. Important to keep an eye out on Lenskart today. Remember, the 6-month lock-in ends today, and we are anticipating close to 7% of the total equity to change hands. What we understand from our sources is that there is going to be a large block deal, close to a little over 5,600 crore worth of equity is expected to change hands. Last evening, the block was launched, and as per the term sheet, there was a base size of just around 3,300 crore. On account of good demand, they've gone ahead and upsized this particular deal option. Now, who are the sellers? Birds View Holding, TR Capital Mauritius, ABG Capital, Kariba Holdings, all pre-IPO investors will be doing a clean-out trade today. Alpha Wave also, which holds close to 4% stake in the company, also will be exiting partial stake. It will be important to see today evening, when this particular deal does transpire, who are the sellers and the quantum of the sale, but expect some pressure on Lenskart going into trade today.
Okay, all right. Thanks very much, Vivek, for that. So, Lenskart block coming through, and we'll see how that gets received. Well, I think Manisha is here with an eye on oil and oil sensitives in focus, also up a little bit. Manisha, good morning.
Morning, and thank you for that. Well, yes, the crude oil prices have rebounded. We did see 96.5 yesterday. From there, 102.5 is where we are trading. There are reports of fresh clashes between U.S. and Iran. The U.S. Central Command did say that American forces intercepted Iran attacks, have carried out defensive strikes, and guided missiles in Strait of Hormuz. That has got the premium back in case of prices. Iran also has said that they are setting up a protocol for tankers transiting Strait of Hormuz. It is mandatory to fill vessel information declaration or risk an attack. So things are still out and open, and we are looking at prices holding above that $100 a barrel mark. There also are reports from IEA saying that the war has disrupted 14 million barrels per day on global oil supplies. Shell, as various CEOs have been talking of major oil companies, the latest one, of course, is Shell, saying that oil market right now is facing a shortage of nearly $1 billion, and situation is getting worse daily. So all of that premium seems to be coming back in case of prices. As far as the U.S.-Iran peace deal works, well, it is supposed to happen in 3 stages. One is formally ending the war. Second is resolving the Strait of Hormuz crisis. And third is launch a 30-day window for negotiation on a broader agreement, is what we understand at this point in time. And the reaction clearly can be seen in sense of oil sensitives.
Thank you very much for that. It's also a very big day in terms of earnings. So 2 important consumer companies, Titan, Tata Consumer report numbers, PSU Bank, State Bank of India, Bank of Baroda, Bank of India, And then you've got platform companies like Swiggy and Urban Company also due to report their numbers later today. So it's going to be an important action-packed day. Here's a quick recap then of the stocks. Stocks with positive news flow are Lupin, Pidilite, Biocon, Dabur, Thermax, BSC. Stocks with negative news flow are Britannia, MGL and Lenskart. Mixed view coming in on crude sensitives. We will get into a break. On the other side, the management of Arvind will join in to discuss their Nalco GFT acquisition. Stay tuned for that.
Welcome back. We've got the news break confirmed. CNBC-TV18 had reported that Arvind's arm, a subsidiary, is going to acquire a stake in US-based non-wovens company, Nalco. We put out a number in the range of what this acquisition is going to be, and I think the news got confirmed within a day. We got the sort of news as we came in yesterday morning. There was a call with the management that analysts listened to yesterday afternoon. We've got the management with us. Puneet Lalbhai is Vice Chairman, and Vice Chairman Arvind is with us. Puneet, good morning. Great to have you with us here. Thanks very much for joining us. Rachna is with us as well, and Rachna reported on this story. Rachna, congratulations. You want to take the first one?
Thank you so much. Of course, I'd first like to congratulate Mr. Lalbhai for the acquisition. This deal is one of a kind that we've seen in the recent times, especially given the US tariff uncertainty. So my question is exactly about that one of the key synergies that have been listed with this deal is the cross-sourcing between India and US. How much of that is on the actual scenario given the volatility around the US tariffs, and how much of it is aspirational?
Main reason to do the acquisition is access to the US market. This product is a needle punch non-wovens, which requires the manufacturing to be very close to the point of consumption. So the synergies will be explored in various phases, but the main reason is to have access to the $2.5 billion US market as far as needle punch non-wovens are concerned. And it gets us into very interesting markets like automotive and geotextiles, which an organic build would have taken very long. Needle punch non-wovens is something we do here in India as well. So it's a technology.
Mr. Lalbhai, morning. This is Reema here. So could you give us a sense of what the combined entity will look like? When you add Arvind, AML standalone revenues plus Nalco with that $100 million top line, 17% EBITDA, you've said this is going to be EPS accretive. Give us a sense of what the consolidated numbers will look like and how will it grow from here on? No, I can't.
No,
I don't think we can.
You.
All right.
I think we'll just check on the audio and we'll just sort of go back to Puneet in just a bit as soon as we are told. But I mean, I think it's a large acquisition for Arvind, and as we had reported, the main reason for the acquisition, as he first said, is access to the US markets, having a manufacturing base there. I mean, they're already in the segment here in India, so perhaps there are cross synergies to be explored, etc. As well. So more on this one. I think we're having a little bit of technical issue, but should have him back in just a bit. Should we just take a quick break and come back? Let's do that. Let's take a quick commercial break here. Hopefully, we'll have the Arvind management back with us. Okay, welcome back. There's 25 minutes to go for the pre-open session. And as you can see, GIFT Nifty is indicating a slightly lower start, 0.4% lower. And, you know, lots of individual names which I think are making news and sort of grabbing attention at this point in time. So that is the focal point. Let's actually, do a little bit more in terms of stocks. That conversation with Arvind got interrupted due to a patchy line. We'll have, Mr. Lalbhai with us as soon as we have that fixed. But use the opportunity to look at the big movers yesterday and the stats, as always. Hormuz is here with exactly that. Hormuz, take it away.
Good morning, Prashant. And a couple of names that did very well in yesterday's trading session. Piramal Pharma was one of them. The biggest single-day gain that the stock saw since October of 2024. And the volumes on the stock have been on the rise over the last 4 sessions now. And in fact, the volumes on Thursday were the second highest seen in 2026 so far for the stock. Over 5 crore shares were traded. The 20-day average is only 65 lakh shares. And 14% of those 5 crore shares were marked for delivery. So around 70 lakh shares. The 20-day average is only 16 lakh shares, and the stock has moved up almost 30% in the last 1 month, and as a result of which it has also turned positive on a year-to-date basis. The PSU story, though, of this year has been BHEL. It has gained in 4 out of the last 5 trading sessions, yes, but out of the last 21 trading sessions, the stock has gained in 18 of those, and the daily volumes now have been above 1 crore shares for 23 trading sessions in a row. Even yesterday, close to 4 crore shares traded. The 20-day average was 2.5 crore. The third of those were marked for delivery. 60% the stock has moved up in the last 1 month, and it is already at a record high. The last 3 years from September of 2023 onwards, the stock has moved up almost 10x in value, and the result reaction possibly of the day could well be BSE. And just before the results, the stock has moved up for 8 days in a row, and volumes on Thursday were the highest in the last 2 weeks. Close to 50 lakh shares were traded in line with the 20-day average. A third of those were marked for delivery as well. So 15 lakh shares again in line with the 20-day average in terms of the delivery volumes. It was among the most traded Nifty 500 stocks on Thursday, and this too, just like BHEL, has been up over 10%, over 10x in the last 3 years.
Thank you very much for that. And 50% up since the beginning of this year. That's BSC. But we managed to reconnect with Puneet Lalbhai, Vice Chairman of Arvind, to talk about the acquisition that they have done of Nalco GFT. Puneet was just trying to get a sense from you what the consolidated entity will look like in terms of revenues, margins, and the growth thereafter once you manage to kick in the synergies.
The India entity now is about 2,000 crores with about 15% EBITDA, and Nalco GFT will add 1,000 crores with a 17% EBITDA. So we'll be a 3,000 crore company with a 15+% EBITDA going forward.
Okay. And the kind of synergies that you expect, what will the consolidated margins scale up to once you manage the cross-selling?
It will be gradually accretive, but what is more important, it gives us access to a market that we otherwise couldn't get access. So it is a move that will further our growth in the very large US market in the advanced materials space.
Okay, all right. Hi, Puneet. Congratulations on this deal. Quick question. The acquired entity does around $100 million odd, and it's been growing at around 10%. Where do you see this number headed in terms of growth? Point number one. And part of this acquisition will be funded by debt. Could you tell us what is the borrowing rate?
So the borrowing rate is around 6%, and debt is taken in 2 places. There is non-recourse debt taken at the US entity, which has more than enough cash flow to service that debt. And there is a chunk taken in India, which will come at the Arvind Advanced Materials level. So the total debt is around 110 million US dollars.
Okay, and scaling up of the...
below our thresholds in terms of comfort.
And scaling up of the acquired business from 100 million?
In our hands, the business will grow faster because we'll be able to equip it with more resources from the parent, and we will be exploring adding segments that they currently don't do, like filtration in the US, which will allow us to grow faster than the previous trajectory.
Puneet, just one question. You're buying this from a private equity player, right?
Yes.
Yeah. I mean, this is a general question, but when PEs are selling, they kind of sort of, juice it out by the time they sell it. Was this not that you can't find good deals, I mean, otherwise, but why were they selling?
I mean, they are at the end of their cycle.
Fund life.
Fund life. So they are selling for that reason. There's a huge amount of diligence that has gone in ascertaining value of the asset, and we are buying a good asset at a fair price. The idea is to acquire a business that doesn't require the fundamentals to be touched at all. We want to be the wind beneath their wings, and we need the entity firing on all cylinders. So
that reflects the approach. It's not about finding the best deal possible. It's finding a fair deal of a very well-run business.
So you don't have to touch anything. I mean, the team there runs it. You don't have to transplant people from here to there. I mean, it's a well-run operation in that sense, right? So it's just you don't have to move it around very much, except of course expansion in other areas, etc.
Yes, so there's value add on top. The core business will run with the management team all rolling over and staying with the entity. We love the management team. They're doing a great job, and we will support them wholeheartedly from India without interfering with what they do.
At some point of time, you like to take it to 100% though, right? What would the valuation be at that time?
That is already baked in. That is already baked into the deal.
Okay.
We will acquire 100% over 4 years. The multiple
At what valuation?
It will be slightly lower than the multiple of 7.75 that we have acquired the 61% stake at. So there will be a chunk at 2 years and a chunk at 4 years.
Lastly, if you could also tell us that the deal is valued at about 7.75 times EBITDA for current year 25, but 68% of the revenue exposure for Nalco GFT comes from the auto sector. Going into, we are halfway into current year 26 and we're seeing auto sector softening up. The demand isn't as much. How does that valuation hold up in this year and how do you provision against that?
The demand for auto and especially the products that we do within auto, and we must remember that we are tier 2 selling to tier 1s who then sell to the OEMs. Our demand is holding up fairly well, but the long-term view is that we will grow some of the other segments disproportionately. So auto, while it will stay large and growing, it will become a lower percentage of the overall revenue mix.
Got that. Just slightly longish. I mean, so you said that you're going to become a 3,000 crore revenue company with about a 15-16% EBITDA margin, right? Post the acquisition.
Yes.
So just give us a sense of what numbers will look like. Once you add on and you want to build out other add to the business which is already there, the core business. What could numbers look like in your mind? Puneet, say 2-3 years down the line?
Simple way to think about it is we were a platform that has compounded at 20% for the last 10 years. We've reached the 2,000 crore mark. This takes us to the 3,000 crore mark in short order. And then the intention is to continue to grow the platform at close to 20% going forward. So in many ways, Arvind Advanced Materials is the largest growth engine within the Arvind Limited entity.
Got that. We'll leave it there. Good luck as you continue to execute and, would love to get regular updates and you join us for that. Thank you very much for joining us. So that is Arvind Limited with Perspective. Rachna, congratulations once again on the deal. I think pretty much everything confirmed with even that 100% over a 4-year period coming through as well, just as we had reported. I think there's about 15 minutes to go for the pre-open session to kick off. And GIFT Nifty, I think, is still down about 100 odd points. Siddharth Khemka is with us. Siddharth, good morning. Any other comment on any of the numbers we've gotten over the last, after yesterday's close? Anything strikes out?
Hi, good morning. So I think a lot of strong numbers. We have seen BSE came out with strong numbers on expected lines. The broad-based growth in transaction charges, that continues. Derivatives activity, that continues to thrive. What was important is that the management has now guided for improvement in the cash market share from about 7-8% to double digits. And that is something I think which will be much more adding to the overall profitability going forward. The only overhang that remains as of now is the RBI regulation on the proprietary trading that will could impact a little bit on the derivative side, but nonetheless, overall very strong numbers. We continue to be positive. Valuations a bit on the premium side, but with the strong growth and the listing of NSE over the next few months, that could also add to the overall business. So overall, we like BSE. We have a target price of 4,400 on that.
Siddharth, hi, morning. Thanks for joining in. So Vari Energies held their Investor Day yesterday, where they've laid out very ambitious plans. I think 1 lakh crore into, 1 trillion rupees in terms of a revenue by 2030. That's a 4x jump. What were the drivers? What did they tell you? And are you convinced they'll be able to achieve these ambitious goals? Siddharth? Oops.
He's frozen.
He's frozen, so we'll try and reconnect with him. So here's what we'll do. We could just get into a short break. We'll come back. We'll have the pre-opening rates. We'll also connect with our technical experts. And Siddharth Khemka will also be with us.
Welcome back. Well, in a few minutes from now, we'll get the pre-open rates. Keep your eye on the bottom of your screen. We have a large trade on PB Fintech, and also we'll be bracing for a large trade on Lenskart. So this evening's institutional number, if you're tracking it later this evening, it'll be very, very distorted. So just keep that in mind. But the mid-cap index, that's been the space to be in. It's hit record highs in trade yesterday. It's crossed the 62,000 mark for the first time ever. Sudarshan joins us to tell us about that big party that's been taking place in the broader markets. So take it away.
So it's an 80-day story if you talk about the mid-cap index. Last time it had hit record high was January 7. Now again, the number 7, basically May 7. Again, the index has hit record high, crossed the level of 62,000 for the first time. And you have seen a big outperformance by broader markets, especially mid-cap index and small-cap index, if you compare against the benchmarks of Sensex and Nifty. So I've taken 2 dates, March 30 and January 7. March 30 is the day from that day we have seen a big buying across the board. So from March 30, mid-cap index is up 18%. Similar move is seen in small-cap index up 23%. For Sensex and Nifty, Nifty Bank and Nifty, both these indices are up in the range of 7 to 8%. But despite these big gains, Nifty and Sensex are still down in the range of 7%, basically 7% each if you compare from January 7, while mid-cap index, as you know, it has hit record high up 1%, while small-cap index is up more than 4%. So which are the stocks that have contributed the most to the mid-cap index hitting record high? BSE up 44%. The stock is at record high. Similar move was in Bank of Maharashtra up 35%, NLC India 22%, CG Power 35%, Bharat Forge 35%. But while we are seeing broad-based buying, there were some underperformers as well. KPI Tech, it was a weak set of earnings that company has given in Q4 and also weak outlook for FY27. They are two of their major clients, their contract is ending this year in H1 of FY27. That's the reason, big downtick that we have seen in their stock. And since January 7, the stock is down 40%, IDBI Bank 30%, Coforge 24%, Kalyan Jewellers 21%, and UPL 20%. While mid-cap indexes hit record high, small cap index still 1 to 2% away from the record high, while for Nifty and Sensex, they still have a few miles to go to hit the record high levels.
So I see you. And I raise you. You know, you had the list of gainers, and we can have that list up. I don't have my list, which is not made yet, but Sterlite Texod is gone from 100 to 350 this year. I mean, just adding to what you said, but this, of course, much smaller. It's not a mid-cap in that sense. MTAR Tech is up 175. 175 YTD. You know, look at HFCL, which is up 115 odd percent. It's just incredible. 20 names, actually, 21 stocks up over 50%. YTD so far.
If you look at it from the financial year, the gains, because we ended so low at the end of last year, the gains are even bigger. Because, for example, HFCL is 120% up, Idea Forge is up 113%, Sunflag Iron is up 112%. So these are not stocks that are 20-30%, they're doubled. Another one is Sterlite Technologies, as you mentioned. MTAR Tech is up 93%. Even Lux Industry is not keeping it very brief. That one is up close to around 93%. So there's been a party out there actually in the broader markets, but we needed to have those guts and buy stocks at those levels, which obviously becomes a little bit tricky.
Yeah, it's easier said than done, Nigel, right?
Absolutely.
It never happens. You have to, those who went down usually come up with the rally. I mean, new buyers after completely bombed out. I mean, there are, it takes all kinds to make the market. But typically, it's easier said than done. Sterlite Tech, right? I just want to ask Siddharth that. Siddharth, do you have coverage or any thoughts on this one? I mean, is it the optic fiber story? Are they in the right kind of segment? Where if you think about it, if it's AI and the AI physical build-out, which is data centers, and it's going into cooling and power and chilling and all the ancillary equipment required for data centers, optic fiber is also an important element, right? So is it that which is the story here behind what's happening with Sterlite Tech? Go on.
Yeah, so Prashant, So I think while we don't cover Sterlite or HFCL, but this entire space has picked up pace, especially after what has happened in the West Asia, where Iran has attacked some of these data centers as well as the AI back office stores. I think that has led to even fast tracking of some of these global GCCs coming into India and trying to set up. So I think this entire story at least looks very attractive over the next few years. The entire be the computing softwares, the data centers, the cables, wires and cables. And also, if you look at, because of that, there is going to be a very strong demand for power. So we have seen the entire power supply chain, right from transformers, distribution, wires and cables, utility companies seeing a strong uptick. So this entire story, I think, definitely has more legs to go from over the next few years.
Got it. Hi, Sid. Morning. Good to see you in. What about Lenskart? Which lens are you looking at it from? At the IPO, people are arguing about hefty valuations. But to be fair, actually, the management's had the last laugh. The stock has done phenomenally well. Today, there's going to be a large trade. It could be, that overhang that gets out of the way, at least in the near term, because there'll be a lock-in out there. What's your view at around 480 rupees odd?
So hi, Nigel, good to be with you on the show. I think overall, we post the IPO, yes, the company has done well, and even we are liking the overall growth story. So I think today's block deal at a discount could be a good opportunity for people who have missed out earlier to see and get into a story like Lenskart, because what is happening is they are able to do the entire value chain in the overall system, and the backward integration that they are doing, that is only helping them see the improvement in profitability. So I think the omni-channel plus the growth strategy across India, penetrating into other newer cities, so all those are leading to a better growth opportunity. And we are seeing that as and when some of these new age companies are coming closer to the path to profitability, the market is liking these stories, and even the valuation in that sense has looking improve better. So what we are forecasting a growth of almost 50-55% earnings growth next year. Valuation definitely a bit on the higher side, but we still believe that with this kind of platform, one of its kind of business that has got listed, there is a huge appetite, and we have a buy rating with a 600 rupees target price on Lenskart.
Siddharth, BSE, numbers look good, but valuations are at 34 times FY28. So with these kind of valuations, is there upside? How comfortable are you?
So yeah, Rima, I think if you look at the core business, that continues to do well, and that is where we believe that the premium valuation could be justified. One of its kind business exchange that is listed. So while we'll be having NSE coming with an IPO in the next few months on the core equity side, they have done well to gain market share in the derivative side, and now they are aiming to improve the market share in the cash segment as well. So I think BSE continues to demonstrate a broad-based growth across segments supported by institutional participation, a stable retail activity, as well as their stronghold in the Star MF business. So exchanges continue to do the investment that they require in the technology, data infrastructure, and hence their supporting the long-term earnings visibility. So with an earnings growth of about 20% plus the unique business that they are having in, plus I think the NSE IPO that will come in, that will be an additional trigger for BSE. So we believe a 40 times P on FY28 is justified, and hence we see a marginal upside of about 10-11% from current levels.
Okay, all right. Siddharth, I want to ask you about the cement pack. You know, it's going to be an interesting time, I think, ahead, because you have close to 25% of the market, which is Ambuja and Shree Cement, that's saying they're going to go slower on Capex spend as well as on capacity addition. That could indeed spell good times, maybe for the largest player, actually, because Ultratech Cement, the valuations have gone a little bit higher, but they are the ones who are executing. And for some of these smaller names, yesterday I observed Nuvoco, Sagar Cement, there was some traction out there because now maybe profitability will improve for the industry. How would you play this? Because the market's not reacting too much to this news now. Input costs have gone up, but otherwise 25% of the market will not be very, very aggressive, which could turn to pricing being better and profitability being better. Your take.
Yeah, so Nigel, I think overall in terms of earnings as well, what we have seen is that a steady quarter, and for the entire cement pack, we have seen about 15% Q on Q rise, a 10% increase. The challenge was in terms of EBITDA, where the margin pressures have been coming in, and if the largest player is kind of indicating slower Capex, I think that is positive for some of the large players. Specifically, if you look at Ultratech Cement, the results were pretty strong. We have upgraded our numbers by almost 8 to 9%, and volume growth has been pretty decent. But now I think the key trigger for the cement pack would be the price hikes that they could take before the monsoon season kicks in. So over the next few weeks, maybe if some of them are able to pass on the price hikes because of the input cost pressures, I think that could be a big trigger. What we like, Ultratech, JK Cement and Dalmia Bharat are our preferred picks in the cement pack.
Siddharth, stay on. Let's just get in a few technical trading ideas. Mitesh Thakkar and Shrikant Chauhan are also joining in. Gentlemen, good morning. Happy Friday to you. Mitesh, let me start with you. Yesterday, we sold off from the high point of the day and got pegged back into the trading range. And this morning, the GIFT Nifty is suggesting another downtake. What's the call on the Nifty? And do you see this traction continue in the broader markets?
I think one Nifty, I said that will be range, and yesterday there was a chance of us getting past 24,400, which did not happen. So back to that range of 24,350, 400 on the upside to roughly about 23,800 on the downside. The only thing is that yesterday there was some good setups on the hourly and 2 hourly charts when some of the indicators recorded positive crossover. So in case the Nifty does not continue to decline after the gap down, then I think there's a chance that we might once again attempt 24,400. And if we start closing above that, then I think, we'll have some slightly a stronger up move.
Okay. Shrikant, what's the Nifty call today? If there is a gap down, would you buy it or just stay away?
Good morning, everyone. So yeah, in case if it is opening, let's say down as GIFT Nifty is indicating, let's say 100, 150 points, then there certainly we should look for taking some long bets. The reason is because the market has shifted its bottom from 23,800 to 24,000. And if we are very close to those levels, then I think we should look for taking some long bets, because I am of the view that the market is going to spend time within the range of 24,000 and 24,500 on the higher side. But on the dismissal of 24,500, we can see the markets moving towards the levels of 24,800. the entire structure of the market, and if we consider the bank Nifty, then I am of the view that buying on dips would be the prudent, advisable strategy, at least in the short run.
Yeah, now got that. Gentlemen, morning. Mitesh, what would your trades be?
Morning, Prashant. I have a mix of buys and sells today. On the buying side is Paytm. It was actually a call yesterday afternoon as well, but the closing was strong, and I think the move should continue. So now it can be bought afresh with a stop at 11.75 for targets of 12.45. Also, buy call on Britannia with a stop at 57.84 for targets of 58.85. And on the negative side is Godrej Consumer. Sell here with a stop at 1,055 for a target of around or below 1,000 rupees. And a sell on Indian Bank with a stop at 875 for targets of 825.
Got that. Paytm, by the way, there was a call as well, and a pretty positive commentary coming through post that call. So maybe we see some action. Let's see what the market does, because it'll depend on that as well. Srikanth, what are your trades?
Yeah, I think broader market is doing well, and if we go through with the basket of those particular stocks, then in that APL Apollo looks quite interesting. The stock has formed double bottom at 1900, 1850 sort of levels, and now again it is rebounding to the next resistance level of 2050 or maybe 2100. So APL Apollo looks interesting, strong candidate to buy for at current levels with a stop loss close to 1940. The other stock on which we are bullish is Titan. Currently it is around 4300. If it is opening, let's say, a little bit lower, 42.75, 42.80, then there we should look for taking long bait with a stop loss at 4200. Again, we can expect Titan moving towards the levels of 4500 or 4600 eventually. And finally, from the defense space, we like Hindustan Aeronautics. The stock has broken its important resistance area at 4700 and it closed about the same. So we can expect further more activity towards 5000, 5050. It's a buy at current levels with a stop loss close to 4650, 4650.
Okay, thank you very much for that. We'll connect with you. For now, let's invite Kulin Lalbhai, Vice Chairman, Non-Executive Director, Arvind Fashions, on the show. A good set of numbers by Arvind Fashions. Revenue growth nearly 15%. EBITDA margins up 50 basis points for the year gone by. The top line growth was 14%, and the company is talking about sustaining this mid-double-digit kind of growth with 30 to 40 basis points of margin expansion going ahead. Thank you very much, Kulin, for joining in. This is Rima here. Now, your growth engine has been the direct channel, retail and online B2C, online B2C particularly. Now, this is about 56% of the mix, but I believe the target is 65%. When do you get there? 3 years, 5 years down the line? And what is the embedded revenue assumption in that?
So typically, we are expecting around a 3-4% increase in the share of direct between our stores and online. And this is a very strategic bet we are making, because when we control the front-end channel, we typically have high gross margins, better turns, and we can really control the consumer experience. So it's a very strategic play the company is getting into. If we split it into offline and online, in offline, we will be opening upwards of 1.5 lakh square feet this year. So around a 15% expansion in our net square feet is what we expect. And like-for-like sales have typically been going up in the 6 to 7% range. So that's kind of the base case over the years that should come. And the online consumer direct business, we are launching .coms aggressively this year. We continue to recruit customers very aggressively. And the direct online channel should grow upwards of 20% year on year in the coming years. So I think we are really trying to spin the direct flywheel as fast as we can.
So direct was 56%. Next year, you're saying it goes up 300, 400 basis points?
That's right, around that level, yes.
So 3 years down the line, you get to your target of 65% for the direct channel. Would that be a fair assumption?
That's a fair assumption.
Okay. And like for like, you're saying should be above 6-7%. Last year, you did 8%. Is there a scope for you to push it towards double digit? I mean, how's
Definitely, I think the scope remains. I think, if, as you are aware, market conditions have not been extremely buoyant. And in tough markets, I think we've been posting amongst the highest like-for-like growths in the industry, thanks to the re-energized brand franchises we have and all the levers we are pulling on like for like. I think if markets become more buoyant, there is a scope for this to go up. Typically, we look for 4 to 5% volume growth and the remaining coming from value growth. And there could be a case for slightly upward trajectory if the markets become stronger from a demand sense.
All right. Hi, Kulen. Good to see you in. This is Nigel on this side. A quick word with regard to US Polo. Now, that business has been doing very well, I understand. What's the size currently? Around 2,300 crores ballpark?
We've touched a 2,500 crore scale, and you're right. It's we had our fastest year of growth last year. So I think the brand is emergent as one of the biggest brands in the space, and it is currently at its healthiest growth trajectory. So we're very excited about where the brand is headed. And it's such a broad franchise that it has multiple growth levers. We are underpenetrated still on retail square feet. New franchises like footwear and women's wear have huge room for growth. And we are premiumizing extremely successfully in that brand. So we are very excited about the potential of that business.
US Polo will continue to grow at ballpark around 14-15%?
We do believe that even at this scale, a mid-double-digit growth is possible. We have the growth drivers for that.
Interesting, because you've really scaled that part of the business and you believe mid-teen growth is still possible. Let's focus on margins. I think you're talking about some margin expansion, right? But cotton prices have spiked up quite a bit and various other input costs as well. Run us through that piece. There are a couple of tailwinds. You're talking about better growth, but input costs, like say cotton, has actually gone up one way. How are you managing that?
So, the price increases definitely are a worry on the COGS side. There are two things we are doing. One, obviously, luckily, we've inverted a lot of the current season before the spike in the prices. So the prices would impact more on autumn, winter, which is the second half of the year. And for that, we still have room to optimize on our pricing strategies and really try and bring more cost efficiency. So we are, of course, very aware that there are cost pressures and risks in the business. We will be working very hard on our cost levers and also on our pricing matrix, because this is a business with some pricing power. So we tend to be very nimble on our pricing decisions. We also, our overall operating leverage doesn't just come from gross margin. It comes from productivity improvement, LTL-led gains. So Select's operating leverage is one other component. And the third component is overall operating leverage, because the salary overheads don't grow in line with the way our revenues and contributions grow. So there are several operating leverage points in the business which should deliver 50 bips.
All right, Kulen, we've got that very quickly. We spoke to the other Arvind Group company earlier, Arvind Limited. They have done some inorganic growth. My ear to the ground, I believe in Kulen's on the prowl. And that could be an asset that you're looking to acquire. How soon and where and what could the potential size be? And you could deny all of it if you choose.
Yeah, so to be very honest, and I want to be very forthright in this, our focus in our next 3-4 year strategy, at least in the immediate future, is scaling the current portfolio. We remain open to opportunities, but we are definitely not on the prowl or in the hunting mode. We are focused on scaling up. You yourself mentioned the scale of US Polo and the scale of our ambition with that sort of franchise. So I think the focus in Arvind Fashion remains organic growth. We're very excited about the inorganic moves we have made recently in Arvind Limited, but in this business, organic remains the core focus.
Got it.
All right, Kulen, thanks very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. So no inorganic acquisition, maybe scaling up the existing lines of businesses. I think we're about a couple of minutes away from market open. Mitesh is with us. Mitesh, what do you have? 9-10 calls?
I'll go with the sell on Godrej Consumer.
Okay, sell on Godrej Consumer was down in a week yesterday as well by about 4-5%. Pidilite is what we want to focus on. Mangalam is here with that one. Mangalam.
Well, it's a solid set that came in for Pidilite. The overall revenue growth was 14% as against street expectations of just about double digit. More importantly, the margins as well. The street was anticipating some sort of moderation. They've actually improved year on year, and there's been a 32% jump in the EBITDA. Net profit is higher by 37%. volume growth has, for the consumer business, come in at over 15%. The street was working with a range of anywhere between 9 to 12%. And the B2B business as well has been 14.8% volume growth at a time where there was a lot of uncertainty. The important part, however, is going forward, the management sees some price hikes and they maintain their double-digit underlying volume growth guidance, with margins being closer to the 20% band as against the 20 to 24% band that they keep speaking about, largely because of the inflation that we've seen in raw material prices.
Okay, all right. Thanks very much. Let's just quickly recap the stocks which we put out since the morning. The Nifty is indicating a 90-point lower start. The sensex is down about 200 points. And we've got can we have the hot boards up and just look at where things are starting up this morning? So, Pidilite, of course, is one. There is, there are other names like, Dabur, Lupin, Biocon, up on your screen at this point. Lupin is down a little bit, which is done well. Biocon is down a little bit. Pidilite is up about 4%. Thermax, BSC, of course, are the others. So BSC, breathless run recently. Thermax is up 5%. And there is Dabur, which is up about 3%. Britannia, MGL, Lenskart are some of the others. They're all down. Britannia and MGL are the ones which are down about 3%. Lenskart, there's a block, and that is the one which is coming through as well. So we'll see and how things start up. But Paytm is the other one. The call yesterday sounded confident. Stocks done well has come up after the results, into the results and after the results. We'll see if there's more here. Keep an eye out on these insurance stocks as well, because last 2 days they've started to make a move. And I think it's about today or maybe over the weekend or on Monday, we'll get these monthly numbers for both life and general. And sometimes they do have an impact. What do we have? First rates come up, 24,200 on the Nifty, 0.5% lower, 0.6% down on the Nifty Bank, 55,575. You got the small cap index, which is absolutely flat. The mid cap index is coming up on your screen. And there is about a 30-odd point lower start there as well. So flat sideways at this stage, 130 points lower on the Nifty heat map. On the Nifty, where are stocks opening before we go any further? So we've got bulk of the names which are down, about 34, 35 names are down, 2 unchanged, and there is the rest which are higher. Asian Paints, Wipro, Tata Consumer are higher, HDFC Bank, Coal India and Mahindra. Vivek reported that there is a block in Coal India perhaps coming as well. So coal is under a bit of pressure, but nothing very large. I think it's a sideways kind of start with a 0.5% lower on the Nifty. Rima.
Private sector banks are underperforming. So the Nifty banking index is down nearly 400, with Axis Bank, HDFC Bank selling off more than 1%. Kotak Mahindra Bank also giving it company on the way down. Reliance Industries is seeing some profit booking. The stock's done well post numbers, but for the last 2 days, it's been a bit subdued. L&T is under pressure. Coal India remains your top loser, still down nearly 2%. M&M, Eicher Motors are selling off. On the way up, you've got Tata Consumer, higher in trade, top Nifty gainer, 1.7% up ahead of numbers later today. Asian Paints is also moving up. This week, Asian Paints has moved up nearly 4.5%. Same time, when we had wrapped up last Friday, Brent crude prices were a lot higher. Today, crude prices have inched up compared to yesterday's level, but still, it's just 101. BEL, Tech Mahindra, Wipro, so some of the IT names have also managed a positive start. All in all, Nifty Sensex down close to about 0.5%, so it's a muted start. Asian markets too have pulled back from record high levels following the skirmishes that we've seen. Nifty at 24,200. Banks weak in trade. Advanced decline ratio, though still in favor of the gaining side.
Well, the number of stocks actually that were advancing were quite phenomenal, and some of those stocks that were reacting to numbers are seeing some follow-through buying. Case in point being in Avalon Tech. The stock is up another 7%. Another one is Apotex. Yesterday the stock, in fact, was up and about. Apotex was up 20%. It's up another 6%. Volumes as well is picking up on this one, so just highlighting that. Besides that, a few more names that are really flying away on rather good volumes. Let's pull some of them up. Thyrocare. Stock is up close to around 8%. Big move out there. That stock has bounced back in style. If I'm not mistaken, in the last 18 months, the stock has more than doubled. So solid move is what we're seeing on Thyrocare. Sonata Software as well is up close to around 8%. So solid move is what we're seeing on that one. Thermax is up 6%. That's heartening to see, not just from a company perspective, but even from an economy perspective. So that's up 6%. Savita Oil is the other stock that's up. Smaller name, came out with a set of numbers. That one is doing pretty well in today's trading session. What's not doing too well? Shakti Pumps. Seems like, it's lost a bit of Shakti this morning, actually. That's down close to 6.5%. Volumes as well, fairly large. So that's coming for some profit taking. Aditya Birla Lifestyle came out with a set of numbers. That's down 6.5% as well. And Global Spirits, that's coming for profit taking. Not too high this morning, in fact, lower. Stock down 6.5%. While Vesuvius, not on very large volumes, that as well is down close to around 6%. Britannia, that's one of the frontline names that's actually disappointed, I think, in comparison to what the street was working with. Stock is down 4.5% as we speak.
We spoke about Asian Paints, which is the top gainer. So Investec has upgraded the paints sector. So Indigo Paints and Kansai Nerolac has been upgraded to a buy, while Asian Paints has been upgraded to a hold. And investors' thesis is peak competition behind us, and Birla Opus is focusing on reducing losses.
I think we'll come back to the paints thesis in a bit. 120 points lower on the Nifty, and 24,200 is where we are starting at this point in time. NetWeb is another one which I think has made a new high today. Should be today. Has it already made a high or just about making a high? I think it's just about, in the process of getting to an all-time high. 4479 was the high, and we're about $20 away. October of 2025 is when the high was made, and then it had fallen. It's got the second largest amount of volumes on the stock. So that is an interesting one. Okay, let's welcome Neeraj Seth. He's with us. He's founder and CIO at 3R Investment Management. Neeraj, good to have you with us here. We'll get to equities in a bit, but one important signal, of course, is the rupee as well. We got some strength yesterday, but it kind of depends on the vagaries of what happens in oil. And that depends on the vagaries of what President Trump does or says. So it's a pretty volatile kind of environment out there, Neeraj. What are your thoughts? Have you seen the worst with regards to the currency? If oil stays around the 100, it's 100, 110. It's very high compared to where we were pre-February when the war started. But, you get used to it, although there are real consequences. Go on.
Sure. So I do think, first of all, the worst of what we saw in March is behind us, which then it means that the oil price spikes and to some extent the resolution path might take long. And then to your point, it will actually lead to the real impact, the second, third level impact of that from an economic perspective. But from a near-term knee-jerk reaction on the rupee, I think we've seen most of it. You can see a gradual decline, but not major moves in the rupee if the oil stays in this range.
Okay. There is a flash at the bottom of the screen, which is important. The Tata Trust's board meeting, which was scheduled for today, has been postponed. So it was being watched widely, but it's been postponed now to the 16th of May. There were two agenda items. One was to consider nomination to the Tata Sons board. And of course, it was basically the Tata Sons listing issue. 6 months back, everybody was opposed to a listing. Now there are people on the board, at least two who want a listing, who are okay with the listing. There are others who are, Noel Tata, of course, is still opposed to the listing. N. Chandrasekaran, perhaps, the stance has been, we'll do what the regulator tells us. So it's an important one, and there's, of course, a power struggle at the top. But this is important information. It was supposed to happen today, but it's been now postponed to the 16th of May. Rima.
Okay, let's continue our conversation with Neeraj. While the US equity markets are surging pretty much at record high levels, barring yesterday's little bit of a sell-off from the peak, the bond markets are telling you a different sign, that they are concerned. The US 10-year bond yield is at 4.45%. The 30-year bond yield is hovering around 5%. So they're clearly concerned about the US economy, the inflationary pressures, gas prices, etc. What is your own sense?
So I would say there are three parts here, to be honest, from the US bond market perspective. You're going to go through the Fed chair change. That's obviously important, which changes the gear in terms of the discussion from an FOMC perspective. The second is the inflation impulse of oil, which obviously the markets are pricing in. And the third is the whole fiscal discipline or the fiscal financing requirements. And with the IPA canceling the tariff and refunds starting, as well as the geopolitical backdrop, the term premium is also increasing. So even though I don't think the Fed goes on a hiking path, you're not seeing the respite in 10 to 30-year part of the curve because of the oil price as well as obviously the fiscal financing requirements. And I don't think that's going away in a hurry.
Yeah, no, not going away in a hurry at all. I completely agree. Just a quick word, Neeraj. This entire AI story, right? I mean, you must have followed the debate about why foreigners are staying away from India. Some have said lack of AI, others have said it's very high taxes. Maybe it's a bunch of things. Earnings growth, of course, has slowed down quite a bit. It's all relative. Earnings growth is better compared to our own earnings growth in the past, but compared to the rest of Asia, US, etc., it's much slower. What, to your mind, is the big reason, Neeraj?
So I do think it's a combination of the AI link or the AI supply chain, where India is not really a big part of it, and the starting point of the valuations relative to the earnings growth. So as over the course of last 18 months, we have seen the valuation somewhat correct because of obviously the Indian markets lagging rest of the world. I think it's getting close to the point where it starts to look interesting with or without AI. And I think that's the part which I'm focused on. So say, if I take a longer term view, now is the starting point from a valuation standpoint more reasonable or not?
Yeah. By the way, Neeraj, do you have a sort of you're a macro watcher? Are you following some of the moves in AI related themes as well? And at what stage are we at right now?
So, see, the key thing is from an AI standpoint, at this point, the markets are still very focused on the infrastructure and the application layer, and not as much we have seen from the real productivity enhancement perspective and the disinflationary impact, which is more medium term, what you would expect. And in fact, one thing I would highlight that what would be interesting from an India standpoint is that productivity enhancement and the AI adoption by the businesses, that can be a real kicker down the road as you see more clear adoption from a lot of different businesses. But right now, it's still in the early innings of the euphoria around the whole infrastructure and most of the hardware, where you're seeing the memory companies just flying because of the expected demand and the shortages, at least in the near to midterm.
We had the HFCL management with us 2 days back, right? Mahendra Nahata was with us. I'm not sure what I want to just go back and watch the interview because, I mean, in India, the two best performing names this year, 2026, is HFCL and Sterlite Technologies. And I mean, actually, both are in the optic fiber segment. I mean, it's possible that, is that same AI kind of theme showing up here? And that's what I was asking Neeraj, at what stage are we at? Because it's the entire ecosystem where people are trying to find, scarcity, and the demand, of course, is there. So both are, if this is the optic fiber AI-related, pulls that we've seen in both these stocks, we've had the AI effect in India as well, and ferocious, absolutely ferocious. I think Sterlite's gone from 100 to 350, and this morning it's up another 5%. So to speak. HFCL has done pretty well. I think about a month back was at 100, 150 this morning at this stage. Neeraj, anything else on your on your radar important enough to watch? Even as we trade another possible end to the war.
So I think there are two aspects: geopolitics and the policy. On the geopolitical side, obviously, how this resolution path evolves from here. There's been a little bit more noise over the last 6 hours in terms of the missiles again flying, which is not good news. But as I said, the market reaction might not, or probably will not, be what we saw in March. And the second, we have the NFP tonight in the US, non-farm payroll, where the expectation is very much, again, a strong month. And if we see stronger than expected, then I think, if anything, the markets start to price out any kind of rate cut expectations from the US curve.
Okay, Neeraj, we'll leave the conversation here. Thank you very much for joining in. We've got the management of Nalco joining in.
Well, that's right. Let's get straight to our next corporate that we have on the show. Mr. Brijendra Pratap Singh, the Chairman and Managing Director of Nalco, joins us on the show. Hi, Mr. Singh. Good morning. Good to speak to you. And thanks a lot for speaking to us exclusively on CNBC-TV18. Let's get straight first to your numbers and the way ahead as well. Tell us a little bit about pricing first. alumina prices have been weak while aluminum prices have gone to multi-year highs. What is the outlook you are working with on pricing with regard to aluminum as well as alumina from year on? If you could give us a broad band.
For this year, financial year 27, what we are looking, alumina prices will be stressed because of the excess alumina in the market, and we are expecting somewhere around $300 to $310 will be the alumina prices for this year. Aluminium, as of now, it is around $35 to $3,600. But it will come down after the geopolitical situations improves. We are expecting somewhere around 3,100, in between 3,000 to 3,100.
Okay, 3,000 to 3,100. Got it. Quick question, Mr. Singh. As you mentioned briefly, if the geopolitical tension cools off, then alumina prices will pop up, you think? Do you see it surge?
Alumina prices will maybe slightly, but there is already excess of alumina in the market. Because you see, when the situations is normalized, what happens, the starting of the smelter will take some time. It will take 6 to 7 months. Immediately, the alumina requirement will not be there. After 7 to 8 months, the requirement will start coming. So that is the thing. So alumina, already excess of alumina in the market is there. It's not going to further increase.
Okay, all right. Let's talk then about alumina first, because your refinery is going to come on stream. If I'm not mistaken, I think the next 30-40 days, it's going to be coming on stream. 500,000 tons or thereabouts. How do you see ramping up of this capacity that's coming up? What kind of volumes are you penciling in for this year? Because earlier I think you were far more optimistic in terms of ramping it up. Now I think you've scaled it back. So give us the updated number.
This 1 million ton refinery, which we are now, will start the commissioning process in next month, around June onwards. Commissioning process, it is a chemical plant, process plant, already lot of things are there. So it will take around 3 to 4 months to stabilize and maybe come to maybe 50-60% of the rated capacity. This year, earlier we had planned of around 5 lakhs. We are optimistically what we are thinking, somewhere around 2 lakh to 3 lakh we will be getting this year. And next year onwards, we'll be ramping up to the fullest capacity.
Got it. Okay, all right. So now around 2 lakh to around 3 lakh in comparison to around 5 lakh.
That is the optimistic figure which we are thinking of.
Okay. Now most of your alumina is exported, right? Could you tell us how much of that alumina that is exported goes to the Middle East? And if you could help us out with, are you looking at longer term contracts within India itself, since the globe is in a bit of a flux and a bit of a oversupply situation on alumina?
Yeah, you see 50% of our alumina production is exported, and whatever we are exporting, last year we have sold around 14 lakh tons of alumina. Out of that, around 40% is going to the Middle East, and rest of the going to the other countries. With this expanded capacity increase in the alumina production, what we are targeting is to increase our presence in the domestic market also. Last year, we sold around 1.38 lakh tons of alumina in the domestic market. This year, we are targeting around more than 2 lakh, maybe 2.5 lakh tons of alumina to be sold in the domestic market. There is a huge demand of the alumina in the domestic market also. We have to increase our facilities for loading of alumina and supply to the domestic market.
Okay, all right. So now you're looking at, incremental supplies in the domestic market because the Middle East has gone into a bit of a flux. And you said, sir, with regard to alumina, out of the total sales, how much is exported?
Around 50 to 55% we are exporting, because we are producing around, maybe at present, around 2.1 million ton. Okay. Out of that, 0.9 we require for our own smelter, and around 1.1 we export.
Got it. All right. So majority of your alumina sales are exported, and out of that, 40% goes to the Middle East. We're getting it correct, right, yes, sir? Around 0.4, 0.5 million tons goes to the Middle East.
It's not that fixed, always it is going, because we do on a spot tender basis. On spot tender, sometimes it goes to some other countries. But on an average, maybe 40 to 45% going to Middle East.
Let's get to some input costs then. I understand, that CT pitch, you have your CP coke prices as well. They have moved up. So as a cost basket, how much have these prices moved up? You have a couple of listed players like Rain Industries, where they have been indicating that the pricing has moved up. Could you tell us, CP coke and CT pitch, how much has it moved up? Point number one. And point number two, what will help you actually is your coal. Out of your total requirement, your captive sources have picked up. So how much did captive contribute in the past year? And this year, how much will it contribute?
As far as the caustic soda prices, CP coke prices and CT pitch prices are concerned, they have increased. Like caustic soda, it has gone up from 42 to 45,000 per ton. Caustic soda prices has gone by around 5,000, 4,000 to 5,000. CP Coke also has gone up by around 12,000. It was 44 on an average last year. This year, whatever the latest prices are, it is somewhere around 52, 53. City Peach has also gone around by maybe 6 to 7% City Peach. So this all increase in prices will increase our our total cost of aluminium by maybe around 5,000 to 6,000 rupees per ton. Cost of metal will increase, and cost of alumina will increase by around 2,000 rupees per ton.
Okay.
We have advantage of our our coal production. Last year we did around 4 million ton, that is 40 lakh tons of production. In previous to that year, it was 2.8 million ton. This year we are targeting 4.8 million ton. So out of total 7.2 million ton is our requirement for our power plant. Out of that, 4.8 will be producing from here, and the rest around maybe 2.5 will be taking from our linkage source.
Okay, we have some color then on the input cost and also the benefit you'll be getting of captive coal. Now we'll focus on the EBITDA per ton, sir, because you're going to get the benefit of higher prices, but there'll be a bit of a mix in terms of input cost spike. And as I've been seeing, your employee cost as a percentage of the total mix, that has come down a little bit, which will give you some breathing space. On an EBITDA per ton basis, I'm looking at a Kotak note. For last year, you did roughly around $1,350 per ton for aluminium, EBITDA per ton. And on alumina, it was around $180 per ton. Now, they are estimating that this year, you'll do around $1,850 per ton on aluminium, and on alumina, around $140 per ton. Is that doable, you think so? Or can it be better or worse?
If we talk on the rupees terms, in the rupees term, our EBITDA per ton is around, last year it was around 1,21,000. It will come down to maybe around $1,300. And alumina was around 21,000 per ton. Slightly it will reduce down because our interest and depreciation will be there. Our costs, especially input costs, are increasing. Totally depends on what will be the realization we are getting from the market. If the realization present which we are getting, it will remain almost same because the realization is on the higher side. But the cost, around 10% to 15% increase in the cost is there. We are expecting slightly reduction in the EBITDA as far as this financial year is concerned.
Okay. Final question, sir. My colleague Vivek yesterday spoke about an OFS in Coal India. And the government could be a little bit opportunistic with aluminium prices being up as well. But their holding is already around 51.5%. Have you heard any kind of divestment plan from the government of India for the Nalco on the whole, or any kind of small OFS?
No, Nalco, as of now, there is no disinvestment plan. The shareholding pattern will remain the same.
All right.
All right. Thanks a lot, Mr. Singh, for joining in and giving us all of those details. Wishing you all the best for the coming year. For the time being, the street expect a little bit more, I think, in Q4. Well, we had some flashes that were at the bottom of your screen, and we understand that the Tata Trust meeting that was scheduled today has been postponed. Shireen joins us to fill us in with the latest on that front. Shireen?
Thanks very much, guys. Yes, this is the CNBC-TV18 exclusive. We are going to understand that the meeting schedule of the Tata Trust today has now been postponed to the 16th of May. No reasons have been given for the postponement, but the communication has gone to the trustees that the meeting now stands postponed to the 16th of May. This is a crucial meeting because, remember, there were two board items on the agenda. One was the inclusion of directors on the Tata Sons board, and the other was the comment made by the vice chairman, which includes Venu Srinivasan and Vijay Singh, on the possible listing of Tata Sons. Remember, they have been in favor of listing Tata Sons. So these were the items that were up for discussion at the Tata Trust meeting today, but that now stands postponed. This also is happening in light of a PIL that was moved in the Bombay High Court yesterday. So whether this is linked to that particular development, we're not sure. Also, it is important to note that the Tata Sons board meeting is scheduled for June, so one will have to wait to see what happens. But today's meeting stands postponed now to the 16th of May.
We were all prepared, but on the 16th now. Shireen, thank you very much for joining us and that information coming through. Have a good flight. And that is the Tata Trust story, which is, of course, we'll have to wait for a few days more for that board meet to take place. But two important issues closely watched. We'll take a break. We are back on the other side. We have the management of Escorts Kubota joining us on the back of their fourth quarter numbers coming back.
Welcome back. Let's talk about individual stocks. Britannia on our radar stock is struggling today, down nearly 5%. Mangalam is here to recap the numbers.
Well, we had spoken about how, the weak those numbers were as compared to street expectations. In fact, the street expectations were elevated, especially post Nestle and all the other food companies' numbers and outperformance. They were working with at least a double-digit revenue growth on Britannia, especially, again, because this was the first full quarter of post-GST rationalization. So the street was expecting some sort of stock retrading to happen and stock refilling to happen. And that's what happened in Jan and Feb. The companies reported 9% growth in Jan and Feb. But the impact of the West Asia crisis on their production, and perhaps as a result of which disruption that took place in the month of March, took their overall quarterly growth down to just about 6%. So that was much below street expectations, and that flowed through into the bottom line as well as the EBITDA as well. The net profit, however, was comparable to our expectations. That's largely because of a lower tax impact. Effective tax rate was 13.5% as against over 22%. So that's what explains why the net profit is slightly above street expectations. But operationally, this is a weak set, and that's largely because of the disruption. But more importantly, now as we speak, the first quarter also, the disruption isn't entirely away. Raw material prices, especially on the packaging front and the fuel front, have increased. And at the same time, we do have wheat inflation, which is coming back on the table after unseasonal rains in March as well. That's something that Nestle had called out. So not good set of numbers coming in the fourth quarter with not very good prospects in terms of margins for the next couple of quarters as well. Keeps the street on tenterhooks, and which is why the stock is lower today.
Thank you very much for that. On the other side, Thermax is surging. Order inflows in Q4 have doubled. Vinny now joins in with more. Vinny?
Hi, so yes, order inflows have surely doubled in Q4, 4,490 crores. There's a big order that they've received of around 1,600 crores during the quarter. That was for boiler package order. So overall order inflow is good. Order book stands very strong at 13,600 crores. So revenue visibility that comes in for FY27, that's strong. Overall, Q4 FY26, strong performance in terms of revenues. Margins have seen an expansion as well. And segment-wise, industrial products, that's done very well for the company, which saw a growth of around 17%. Margins over there were largely stable, 13.6% versus 14.6%. So slight bit of a decline, but not major concerns because of raw material inflation. Some concern there. But industrial infra, that's done well in terms of growth. Managed to see good EBIT margins over the last couple of quarters. So that's the positive sign that the street is taking as well. They've seen a strong performance in heating, cooling, water, waste solutions as well. So that is supporting the growth. Chemicals business profitability is lower due to input costs being higher, change in product mix. That's impacting the overall margins, EBIT margins of that segment. And green solutions, that also there's costs that have come in here. They're expanding this side of the business, relatively newer. So overall, they've seen a revenue growth there. EBIT margins will come up as well. We have the con call at 10 o'clock, so we'll start 11 o'clock. So we'll start seeing the highlights coming in on that front. But strong numbers in Q4. That's why the stock is running.
Okay, that's a very large move on Thermax, 8.5% on humongous volumes as well. So it's not a small price, small unit value name. It's a 4,500 rupee share. And I mean, similar is the case with something like a Netweb, which is surging as well. It's lost a little bit from the highs, but doing well. Well, L&T is back. The order, compared to the size, of course, is the backlog. It's small for L&T now, 1,000, 2,500 crore order, but that's what's coming through. Bharat Madan is with us. He's a whole-time Director and CFO at Escorts Kubota. And we're going to talk about numbers. We're going to talk about the outlook as well. Thanks very much for joining us. Good morning, Prashant here.
Morning, Prashant.
In the fourth quarter, sir, your tractor growth, domestic tractor growth has lagged industry, 23% compared to 35%. You're also guiding for a flattish FY27. You know, we had numbers from Mahindra and guidance from them. They're guiding for mid-single-digit growth. Could you just contextualize this for us? What are you seeing out there in the market? Is it about a specific product? Is it about regions that you operate in vis-a-vis, I mean, a player like Mahindra? Just give us that sense, sir.
So, Prashant, I think first I'll try to respond to your first part of the question, which is in regard to the last quarter numbers growth. So obviously, as you mentioned, so there has been a regional disparity in the growth. Within the last quarter, you've seen the growth in the western part has been very strong, especially the Maharashtra state, which has actually outgrown the subsidy-driven demand which was there. And since we're not very strong player in those markets, that's one of the reasons why we lack the overall industry growth. But in spite of that, the growth has been almost 23% in volume, in this quarter. So I think coming to the second part of the question, and it's to the guidance for the industry going forward. See, so right now we're starting the year with a lot of headwinds now, with this geopolitical scenario, with the cost pressure building up on the input side, and then the initial prediction of monsoon, which is not very healthy. So there are many things, I think, uncertainty which we don't know how it will perform. And then there's also going to be a large base effect will start pitching in for September. Since last year when the GST cut happened, so this impact had started coming in for September month. So first 5 months of this year, obviously we are bullish. So there will likely to be double-digit growth till maybe July, August. But after that, obviously many other things will likely start playing out, which is the reason we are expecting maybe second quarter may not see that sort of stronger growth. It may be a flattish sort of quarter, and second half actually can be a bit of degrowth. So which is why overall we look at plus minus 2-3% on the industry for this year.
So you're saying industry growth will be, in your opinion, 2-3%?
Plus minus 2-3%. So it can be either way, depending on how the second goes here.
And you'd be around that number, around that range, basically.
So we as a company should do better than that because we got a lot of product launches which has happened in the last 1 year or so, and there's more in the pipeline within this fiscal. So I think from application perspective, we intend to cover all geographical applications which are required for the tractor space. So that gives us, I think, some positivity for this year. So overall, volume-wise, we think we should do better than industry this year.
So plus, so should be what kind of, I mean, what should we expect?
As we'll expect mid to high single-digit sort of growth for the company.
Mid to high single-digit growth, volume growth. Got it.
So last year, because you...
Sorry, the monsoon is a monsoon which is below normal. So most of the areas in the south and west are more dependent on rains for irrigation. And since those are not very stronger areas, and if a stronger markets do well, so that will be positive for the Escorts in this year.
Got that. So last year, did you lose market share because you underperformed? And if yes, how much?
Yeah, there's a 30 basis point, I think, loss of market share on the retail side, because we normally follow the retail data only. So which is what we are saying, because that was basically coming because of geographical disparity in the growth, which hopefully in this year will get straightened out.
So you are hopeful of reversing that market share loss of 30 basis points this year. One more question on commodity side. Now, steel prices are up, tire prices are up. You particularly also get impacted on account of the increase in wages in states like Haryana. Overall, what has been the increase in cost, inflation for you? How much have you been able to pass on? I think 1.5%, but would you consider a second price hike?
So we'll be watching the industry. Obviously, if the input pressure remains high, I don't think anybody will be able to absorb. All OEMs will have to take a call and maybe pass it on a bit of that. But since the scenario is not very clear how long this geopolitical situation will last, if it's only going to be a quarter, maybe OEMs will absorb that impact. But if it continues for a longer period, then I think there will not be any option but we'll have to pass it on to the market.
But as of now, with this 1.5% price increase, sir, you've not been able to pass on the entire burden of cost inflation, which is 5-6%. So till there is a second price hike, your margins will be under pressure in Q1?
So this 1.5% increase was the normal increase which we do every year. So this is essentially to take care of the inflation and the normal cost. So obviously this does not factor any inflation on the commodity side, which will be separately tackled. So the assumption normally is any inflation gets passed into the market. And we have seen it happening even in the last war scenario in the Russia-Ukraine time in 2022. So the similar thing had happened. So, but like I said, since the demand right now is strong, nobody wants to really touch the demand side as of now because the GST impact is still running. If you end up increasing the prices too much, then that will start impacting the demand adversely, which no one would like to have.
Could you give us a sense of the cost breakup? Sir? I mean, the steel, I'm assuming, is a single largest component, right?
It will be a mix of everything actually. Also in tractor, typically is casting, forging, sheet metal, which is essentially like the steel, and then obviously the tire tubes, which is again a major component, and electronics. So we'll have a couple of, I think, all metal, steel, copper, aluminium, which will be all coming in together. And we've seen the cost pressure coming across all commodities now. In addition to the cost on the process side, with the energy costs have gone up, and then the manpower cost has gone up because of this minimum wages increase in Haryana and UP.
On an average, taking all this into account, how much have costs gone up for you when you procure all this now?
So like I said, since the procurement team is still not finalized the discussion with suppliers, but the indication we are getting is it can be anywhere between 5 to 6%. Obviously, it will depend whether we pass it on in one go or it happens in stages, and most likely it will happen in stages in the phases quarter on quarter. So overall, the expectation is even if there's an initial increase in the commodity prices, it will get rolled back by the end of the year. So overall, we try to protect the margin for the company on a full year basis.
13% margin, sir, should hold?
Just the effort for the full year. Assuming the war doesn't last too long, and hopefully we are able to recover it back towards the end of the year.
So the effort is 13% margins, protect that. Export contribution through the Kubota channels has reached 67% of exports. What's the medium-term aspiration for this?
So medium-term, our expectation was to take exports to 15% of our top line, and this will remain one of the priority area for us. Though this year we don't expect export will play a major role because of most of the products which we intend to export will start coming in from FY28, and that will be a major boost, which will give to the export numbers. So from next year onwards, we expect the export numbers should do extremely well, and we should be able to double the export numbers in the next 4 to 5 years.
So, just one question. In terms of financing, right, is there any issue at all for tractors? Are lenders becoming a little more cautious at the margin?
No, not at all. I think credit availability has never been an issue, I think, in the market. And then we also started our own captive finance company last year. So it's just completed 1 year of operation. So that's also doing well. But we don't think credit availability is an issue for the agriculture sector right now.
That captive NBFC, I think, has a 100 crore loan book against the 200 crore of equity that you've deployed. So as of now, at least, there is no leverage. What is the target loan book that you have for this captive NBFC by, say, FY27 end?
So board has authorized us to put in 700 crores of capital into the company. Until 700 crores capital, there will not be any leverage. And we expect that book should hit somewhere, I think, in the first quarter of FY28. And that's the time when we look at further leverage, on the books. So by that time, we expect the company will start doing break-even. And then after that, only the leveraging will start.
Hi, Mr. Madan. Good morning. Good to see you. Could you tell us a little bit more about the new upcoming greenfield capacity that's going to be coming on stream? I think the phase 1 is scheduled, right? What is the total capacity that will come on stream? What is the total Capex? And how much has already been spent?
We are in the process of acquiring the land, actually. So the allotment has been done, and we just made the initial payment to the government. So we expect them to do the groundbreaking ceremony sometime in this quarter.
Okay.
And the construction activity will start. So our idea was to start production somewhere in FY19, 29, FY30, depending on the demand scenario. So we can expedite also a bit. So that'll be the first phase. So in that, we intend to start with the additional capacity for both tractor business as well as construction equipment business. And there'll also be a global part center for the spare parts, which will be created in that capacity as phase 1. This is phase 1 initially, and then obviously we'll keep expanding capacity in phase 2 and phase 3.
You want to put some numbers to it? Total Capex you've lined up for this capacity that comes up on stream in FY29 in volumes as well as in value terms?
So we had given I think, an indication of about 2,000 crores in the project report, the DPR to the government for phase 1. And this will include both tractor and construction equipment capacity. So tractor capacity, I think, will be somewhere around 60-70,000 units initially in the phase 1 to take care of at least next 3 to 4 years demand. And then phase 2 again will be similar capacity, which will get ramped up. It will happen in 3 phases, but the idea was to double tractor capacity from the current level. And 60,000, there will be 3 phases for the tractor business, capacity build-up, which will happen over there.
What is the current utilization level, sir, and the current capacity before adding this 1.2 lakh?
So we are almost at 75% plus capacity utilization in the last year. So total capacity today is about 170,000 tractor, which can go up to 185 if we stretch a bit. So right now we're still at about 125 or 30,000 sort of unit last year. So hopefully this year then obviously we'll expedite the greenfield construction activity.
These state subsidies can have a tremendous impact, right? I mean, the subsidies are 30-40% of the cost of a tractor. So what states do can have a meaningful impact on how much companies are able to sell, right? I mean, apart from what you do.
Yeah, that's right. So like you mentioned, the Maharashtra, like last year, has become the second largest tractors volume state, which normally used to be number 4, number 5. So obviously, major boost has come because of this state subsidy. And then obviously the state elections will be a lot of loan waiver schemes which keep coming up, which can also, in some way, help the industry.
These are factors external to what you can do as, running the business, but has an outsized influence, as we've seen this time around as well. Thank you very much, sir. Appreciate you joining us. Good speaking with you and good getting that perspective. I think we have Sudeep Shah of SBI Securities with us with a quick sense of the technical levels and what he'd want you to do. I think we're down about 145. Sudeep, good morning. What's your recommendation?
Good morning, Prashant, and good morning, Nigel. Prashant, what I feel is that markets right now, post this move in the last few days, is just we are just going into some kind of a range. However, what is important is that the market breadth is still not bad. The mid caps and the small caps segment of the market is doing well, and they are the first one to pick up since the first 15 minutes dip. So overall, I feel 24,050, 24,100 should hold out as a support on Nifty. And it's a matter of time before we break out beyond 24,300. So all in all, for the next couple of days, I feel 24,050 should act as a strong base. And we are heading towards 24,300 and beyond that 24,500.
Okay. All right. Hi, Sudeep. Good morning. And my colleague Rima as well as saying good morning. I think you missed her out. She's in studio as well.
Good morning, Rima. Good morning.
All right. Sudeep, what about individual stocks? What's on your radar?
Couple of them, the two mid caps. The first one is CG Power. Now, 2 days back, the stock has come out with its numbers and the numbers have been fairly good. And we have seen that the stock has broken out of a symmetrical triangle breakout a week back and strong volume. So from here and on dips to 850 can be bought, can be accumulated. 835 will act as a stop loss. The targets positionally would range from 900 to 930. The second stock is GE Shipping. Here also, we have seen a strong breakout on cards on the weekly charts last week. This week, we have seen a follow-up action also. 1550, 1530 zone has acted as a support since last few days. So we feel that this can be bought with a stop loss at 1530 for our targets of 1650, 1700 on the upside.
Got that. In the large cap space, we are seeing weakness in a couple of these private sector banks. In fact, even the Nifty Bank is underperforming today. HDFC Bank, Axis Bank, down nearly 1.5%. Any trade here?
Rima, what we feel is that the bank Nifty is kind of more weaker than Nifty. And here, for Bank Nifty or for all these private banks to move up, Bank Nifty needs to now sustain about 56,200. So till the time that does not happen, all these private banks would be on a weaker footing. And specifically, if we talk about HDFC Bank, here the important level is 801. 800, 802, this is an important resistance. Until and unless this is not crossed on the upside, I feel lower levels of 765 to 770 also can be retested. And it's not a matter of this thing that whether it is moving up or not, even if it consolidates here, Bank Nifty would still continue to underperform.
Thank you very much for joining in, Sudeep. Great chatting with you. Let's get to some of the big movers in the market now. Sonal first joins in with MGL.
Well, Mahanagar Gas, it was expected to be a weak quarter because of the West Asia crisis. However, volumes have been strong this time, but there was a big miss on margins. Overall, revenues are down 0.4%, absolutely flat on a quarter-on-quarter basis. EBITDA is down 26% for the company. Margins at 12.7% versus 17.1%. Profits down 35%. As I said, volumes very strong, 11% higher on a YY basis, 1% on a sequential basis to come at 4.7 MMSCMD. The EBITDA per unit, however, was lower, down 26% on a YY basis. It was down 27% on a sequential basis because of higher gas costs. However, this was the sector which was most impacted because of gas crisis. We have the conference call at 4 p.m. today, so we'll get more clarity on what is the outlook, how are they sourcing their gas, and what is the current pricing as far as input costs are concerned.
Thank you very much for that. Thyrocare is the other one, which is surging in trade right now. Ekta joins in with the numbers. Ekta.
Well, good quarter coming in for Thyrocare. So the revenue was up around 19%. The EBITDA margins expanded to 33.5% and the profit came in at around 48.7 crores. Now, in terms of the key highlights, revenue up 20% in Q4, 59 million tests conducted, which was up 29%. Complaints per test was down 34% on a year-on-year basis. Pathology, which is basically their bread and butter business, within that franchise revenue was up 21% and partnership revenue was up around 23% on a year-on-year basis. Even FY26, they did well, revenue up 20%, margins 31%, Profit at around 162 odd crores. Revenue per test was at around 36.1 rupees. We had revenue per patient, which was up 8% year on year. Tests per patient, which was up around 8% on a year-on-year basis. And again, franchise revenue was up 18% and partnership revenue, which was up 32%. So overall, good performance coming in for Thyrocare. They've said that their vision is to go deeper into India, focus test menu, strengthen the existing franchise segment, as well as expand partnerships, plus strengthen their presence in Tanzania.
Okay, all right. Thanks a lot for that, Ekta. Well, focusing on Vesuvius, the stock is under pressure. Remember, this is one of the stocks that saw a big re-rating. And, any kind of miss when a stock goes that one way up, as you have seen the last 3-4 years, the stock has gone up big time, I think from around 1,000 rupees. It went all the way to 5,000 rupees, and that's the adjusted price you're seeing post the, the corporate action out there. Last 1 year, it hasn't done anything. In fact, from the recent peak, the stock has already corrected a good deal. And the numbers are fairly disappointing. I say that because the revenue growth is only around 4%. Remember, this is the company that added capacity as well. They were talking about adding, getting into more verticals as well. So 4% growth is something the street doesn't like. In addition to that, the EBITDA was up only around 1%. So you don't have the benefit of operating leverage, and then the EBITDA grows only around 1%, telling you that the margins actually came under pressure. So the margins on a sequential basis, it's more or less steady. However, on a year-on-year basis, it's down by close to around 50 basis points. When a stock runs up, expectations are very high, and they haven't delivered on this front. And other expenditure, employee costs, both of them have gone up by more than 10% when your revenue growth is up only around 4% or thereabouts. The PAT number, well, that's a little bit lower by close to around 6% because the other income on a low base was down close to around 7%. Net, the stock isn't cheap. It already ran up a good deal. No margin for error. That's where the stock came under pressure. I'll tell you what, this market, they have been talking about reinventing themselves. So let's see how the remaining of this year goes, because they're a company that actually have gained market share over the years. Can they get back to their winning ways? Well, that's something that the street will track. For the time being, numbers disappointing, stock down 7%. I'll tell you what, we'll slip into a short break. On the other side, Manisha Gupta is waiting for you. She's going to tell you all that's going on in the commodity markets. Stay tuned.
Welcome back. Let's talk commodities now. Manisha is joining in and she's got her eye on crude oil prices.
And why not? Because we're looking at very volatile moves coming in for this one. While we have rebounded in the overnight markets and we are holding around 102, but for the week, we're down by 8% for the crude oil prices. It continues to be a very volatile commodity therein. There are reports of fresh clashes between US and Iran. And from what we understand is that the US Central Command has issued a statement suggesting that they have intercepted Iran attacks, carried out defensive strikes and some guided missiles via the Strait of Hormuz as well. In the meanwhile, Iran also says they have set up now a mandatory record taking in which all the vessels that are wanting to pass via Strait of Hormuz have to mandatorily fill a form which is about vessel information declaration or risk and attack therein. The IEA suggests that the war has disrupted nearly 14 million barrels per day of global oil in the markets therein. And Shell CEO has said that nearly 1 billion barrels of crude of a shortage is what the global markets are dealing with right now. Then when it comes about the Iran peace deal with US, well, there are 3 stages that we understand from various tweets that both countries are working with. One is the formally ending the war, declaring that. Second is resolving the Hormuz crisis, and then a 30-day window for the actual deal to happen. The markets believe that this is how the whole thing perhaps will flow. But a lot of money clearly has been made in case of crude oil, the way the prices have been moving, 10 to 12% at some days. So there are bets on falling prices, leading to nearly 7 billion of money being made between the month of March and April. This is as per various reports that we have collated there into the market then. Also, when you look at the overall prices impact, that also has been quite on the stronger side. And there have been bets made just before you have seen those announcements come in, either from Iran or from US for that matter. So bets have been made just minutes before those announcements perhaps came in. And that is the reason there. I just want to quickly take you through some dates. And the most recent clearly has been 6th of May, which is in this week itself. When we saw US and Iran are close to a working deal, this is what Axios reported. And as soon as that report came out, we saw the prices decline by nearly 12%. 12%. And that Axios story, US and Iran did allude to that in some parts there, not totally, but the market had moved already. And we haven't seen the prices come back to those 113, 114 levels even now. Seems to be holding around that $100 to $102 therein. And then go back slightly more, and then you have 21st of April. That is where you had nearly 830 million worth of shorts that were created in Brent and WTI and various other commodities. The announcement at that time came in was that the US is extending the ceasefire with Iran. There's money that has been made during that time as well. Go slightly before, and 17th of April was when investors shorted 2 billion worth of contracts in crude and varieties. The announcement at that time was that Iran said that on Friday that the Strait of Hormuz was open. We saw the crude oil prices decline nearly 11% at that point in time. It was a Friday on 17th of April, and before the markets headed for a weekend, you saw the prices decline very, very sharply. In the month of April, this has happened 3 times, by the way. So not just 17th of April, but 7th of April as well. We saw shorts being created worth nearly 950 million therein. And at that point in time, US and Iran had announced a 2-week of ceasefire. Prices on that day declined 15%. And then it was 23rd of March when the trade investors sold nearly $2.2 billion. We saw US President announcing that he would delay attacks on Iran's energy infrastructure. At that point in time, on that one day, you saw the crude prices decline by 15%. And there is quite a bit of records being created by various agencies on how the announcement came at 11. And between 10:50 to 10:55, there was huge selling that we saw across exchanges, across energy products as well. That has led to nearly $7 billion being created just in the month of March and April. So while there are statements that have been put out from US administration warning staff against taking any information that has been not made public yet, while the US CFTC is looking into the matter, there's no official comment from them, but the market's clearly making or putting those dots together.
When you hear all these instances, the positions were taken before the announcement?
Before the announcement.
All of them?
5 to 10 to 15 minutes before the announcements, yes. You can see that volume jump suddenly and the short positions that have been created in all of those contracts as well.
So we've ended the war at how many times? 6 times?
Yes, 6 instances till time.
Crazy, absolutely crazy, but interesting as well. Thanks very much, Manisha, for that. So that's trading around these events when there is signs of de-escalation, prices slump, and then, of course, so far, we're still waiting. I think just a couple of more names, right? The market's down 130 points. Tejas Networks saw a very large move yesterday. It's down 3%, seeing some profit booking. Hitachi is another one. Hitachi, was down day before, was up yesterday, is down 2% again. MTAR Tech is down about 1.25%. It's the number 2. It's number 2 on the leaderboard, YTD, with 175% gain. So. Very few come close. Shakti, of course, we mentioned in the back of results. Data Patterns is down about 2 1/3. Some of them are just movers from yesterday. Raymond Realty, for example, was a big mover yesterday. It's down 2%. Godrej Industries was locked up 20% yesterday. It's down about 1.5% or so. So it's just some reversals, nothing more. Idea Forge is another one, for example, down 3 today. But again, it's done very well in the recent past. Global Spirits is down about 10, 11 odd %.
That's numbers.
That's numbers, yeah.
That's
a very sharp cut coming through. And I think the stock's done well coming into, okay, maybe not quite, but it has actually. So from 860, it's come up to about 1100 in 15 odd trading sessions. So yeah, it's just 10, 11% lower. BSE was the other one, right? Numbers are super strong. Stock moved up $500 over the last 10 trading sessions or so, and seeing a bit of profit booking. It came back into the green, but holding on despite the run-up. We'll take a quick commercial break here. We come back in just a bit. It's our segment. It's the economy. Lata speaks with economists, Maitresh Ghatak and Debajit Shah, on how West Bengal's economy may be boosted post-change in the government there. Stay tuned.